And how is the economy doing since 2017? I mean, are we better off today? Is it
in an ever-expanding bubble I called it the everything bubble, but it's also the Bernanke bubble. This was created. The economy is completely supported by all of the currency creation and the low interest rates that were created because of the 2008 crisis. And, when you take base currency, the paper dollars that exist, from 0.8 trillion to 3.2 trillion, when you create all that currency and then you give it to the biggest banks and brokerage houses in the United States, you got to expect the stock market to go up, and it did. And but the currency creation, Janet Yellen stopped that, and the stock market is still going up. But by all measures, this is just it's a hyper bubble again. We're in some very dangerous territory. And we've never seen manipulations of the economy like this before. So this is an enormous experiment that I think is going to end very badly. And one thing that you can absolutely prove is that this is the everything except gold and silver bubble right now. PE ratios, the price of a stock compared to the price of a share of stock compared to the earnings that company makes per share, are back up in hyper bubble territory. Real estate values have been pushed back up into bubbles, and now we've got bonds are in a bubble. And, in 2000, we had the NASDAQ, the stock market crashed. 2008, we had stocks and real estate. This is going to be stocks, bonds, and real estate that crash the next time because they're all in. Now we've got a massive bond bubble that's a global thing. It's a debt bubble. And we're also in the second longest economic expansion in U.S. history. This is since the period of time between recessions. This is the second longest gap between recessions, and there's always a recession around the corner. The Congressional Budget Office has projected that the next recession is going to be in 2029, but not until then, 10 more years. And I think it's in February or March, this becomes the longest economic expansion in U.S. history. There have been somewhere between 47 and 53 expansions and recessions. It's hard to measure them when you get back before the Civil War. And at the same time, whenever this next recession happens, and it doesn't require something to happen in the United States necessarily. All economies are in these bubbles that have been blown by central banks, and China is in one of the most massive bubbles. But if something happens in China, Europe's having a whole lot of problems. Whenever a really bad crisis happens in one of these countries, it'll sweep around the world, and it's going to be global. And so, I'm grateful for the extra time that I've had to get prepared for it. But the thing is, the longer it lasts, the worse the outcome is going to be, because the economy is sort of a closed loop, and they have done a huge amount of manipulation, and all of that energy is going to be released in the opposite direction. And I feel like it's sometime soon. It could be starting right now with the market crashes that we've seen, but I just get the feeling that it's going to happen next year. And I hope it doesn't happen right now. I still want more time to prepare, but I'm getting ready for a large wealth transfer. But at the same time, it's a scary thing. I think this one's going to be bad.
What's very interesting is that the central bank, and you hear a lot of financial pundits, they say, well, this time it's different. It's not the same. We're not going to enter a recession. We don't have to look at the yield curve. And, from your Hidden Secrets of Money and your research that you've done, and you've looked at many different countries, is it that different? Have other countries gone through what we're going through right now?
You mean the bubble?
The entire economy, where we're creating currency, where we're...
Japan's been doing this for quite a while, since their economy crashed in 1989 was their bubble that popped, and they haven't recovered yet. And so this is that's what happens. You build up certain levels of debt, and their levels of debt in their economy they've been a zombie economy since 1989. They're still trying to get out of it, and the central bank is still doing all of these emergency efforts. Every year there's some new thing announced, Abenomics and all of this stuff. And I mean, they've proven without a doubt that Keynesian economics doesn't work.
Yeah.
So this next crash scares me, and the ability to come out of it scares me, because when Japan's economy crashed, they had us to sell to. To whom do we sell goods and services when our economy crashes? And you know, we've got, this is the everything except gold and silver bubble. We've got the stock market back up in a hyper bubble measured by PE ratios or dividend yields. And did I cover what a PE ratio is? It's the price of a share of stock divided by the earnings of the company per share. And so it's a real good measure of if you're paying too much or paying too little. And right now we're back into a hyper bubble, and that plus the dividend yields, how much the company pays in dividends for a stock. Real estate is back in big bubbles in most areas. And real estate never, you know, when the real estate crash happened in 2008 in the U.S. and Canada, or U.S. and Great Britain, Canada, Australia, New Zealand just sort of took a breath and then kept on running. They are in these immense bubbles, and so is China. I've been to China a few times, and their bubble is a government-mandated bubble. It's a government-funded bubble. And so it's gone into valuations that are insane, to where when it pops, I mean, it doesn't require a problem in the United States to kick off the next global crisis. It could happen in Europe or China or Australia or the United States, and it'll just be global. And this time, we also have the unwinding of the global dollar standard, the world monetary system. We had the classical gold standard before World War I, the intra-war gold standard called the gold exchange standard, the Bretton Woods system from 1944 to 71, and then the global dollar standard. And these are vastly different monetary systems. And people, you know, there's other people starting to warn on this now. I've been giving presentations on the death of the global dollar standard since 2009 and keeping track of all of what I call the nails in the coffin. Every time a country bypasses the U.S. dollar in trade, or there's just all of these things happening. The first nail in the coffin was when Saddam Hussein started selling oil for euros. So there was this huge portion of stability from 71 up until Saddam Hussein started selling oil for euros. And I can't remember if that was 2003 or whatever. And that was the first nail in the coffin. And then they're coming, like several of them every week now. I can't keep up with it anymore.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
But all of these countries creating their own international payment systems, China opening up oil futures on the Shanghai Exchange, and they're now the world's largest oil importer. So the death of the petrodollar is coming pretty soon, because there's going to come a day where China, being the world's largest oil importer, larger than the United States, just demands that the Saudis and OPEC sell their oil also priced in yuan. And the thing about that exchange is, when Saudi Arabia oil company sells a futures contract and then they deliver the oil and they get paid, they can immediately put that cash into a gold contract and then withdraw the gold from the Shanghai Exchange. So even if they don't want yuan, they can get gold. This is coming very rapidly. And when you look at the convergence of these bubbles popping, a market crash, and a potential shift in world monetary system, and some of the world's central banks are getting ready for this, and they actually have Hungary just bought a whole bunch of gold, increased their gold reserves 1,000%, and in their statement they talked about the stability of the financial, the world monetary system, and a potential shift away from the U.S. dollar. So this is going to be huge, whatever happens. I don't know when. I hope it's not this year because I would like a little bit more time to get prepared. I just feel like it's going to be next year. But with what the market has been doing lately, I don't know. This could be the beginning of it right now. Who knows?
You mentioned bubble, stock market bubble, housing bubble, and you said gold and silver, they're not in a bubble. Why aren't they in a bubble?
Oh, silver's below the cost of mining. Silver was $50 in 1980. Can you name something that is selling at a discount to its 1980 price? Anything? No, everything is 10 times higher. So silver at 14 something is just, I mean, like stupid cheap. And we know, based on a whole bunch of metrics, that real estate is very expensive. Bonds are very expensive. Stocks are very expensive. So basically all financial assets except gold and silver and maybe cryptocurrencies. I have no way of getting a value measurement because there's just not enough history. How do you value a cryptocurrency? It's the value is determined by the supply and demand, and the underlying value is the technology, the code that was written. That's sort of what kicks it off, and the infrastructure of mining rigs and so on. That's the value in cryptocurrencies. But you know, the market of cryptocurrencies has just begun, and it was very tech-savvy people that were invested in Bitcoin at first, and the mainstream is just coming into it now. So the amount of cash that should flow into that sector is huge. But at the same time, there have been the creation of so many thousands of cryptocurrencies where back in 2013, from 2008 to like 20, I can't remember when Ethereum came out, but it was just before the middle of 2014 sometime, like 6 months or a year before. So back in 2012, from 2008 to 2012, there was only one cryptocurrency. It was Bitcoin. And now you literally have thousands of them out there. And so I don't know if there's about to be a ton of cash that floods into that sector. But they've inflated basically the currency supply, the cryptocurrency supply, by coming out with so many different cryptocurrencies. But there's a huge future in the technology that underlies cryptocurrencies, and that's more important. The distributed ledger technology. So you're talking about blockchain technology and some variations on it, and hashgraph. And those technologies are going to touch everybody's lives. It's going to run the internet. There will come a day in the future where emails are secured through blockchain or hashgraph or something like that. The power generation, dams, power plants, nuclear plants will all be being run off of a system like this, including the distribution grid and the billing of the power. The traffic lights will be timed by this. Video games, anybody if you're looking at a website on the internet, you're going to be getting served from the blockchain, not from a server farm somewhere. Anything that has to do with accounting, recording or storing data, serving data, it's all done better. This is just the best way to do it. And so there's a huge future there. But it's a horse race, and picking the winner is not going to be an easy thing. I view cryptos sort of as a speculation because some people are going to become very rich on some cryptos. I view gold and silver sort of like a savings account, but right now they're so undervalued, they're going to have a huge potential. I do expect that you're going to see gold somewhere way over $5,000 an ounce someday pretty soon. I think that there's going to be another recession that's going to turn into a global financial crisis again. And I think the safe havens are going to just take off. And with silver under mining costs, I mean, this can't persist. The reason that silver is under mining costs is because it's a byproduct of mining copper, lead, zinc, and gold. And most of it, that's about 60% of the silver production. And so if we have an economic slowdown, that means there's less wire being made and copper pipe being made for all the homes that are being built all over the world in the real estate bubbles. And there's less lead for car batteries as auto sales slump. And so as the base metals demand goes down, silver supply vanishes and silver will skyrocket. Like I said, it's selling at a discount to its 1980 price. That's crazy. Silver really should be far, far higher, and the low prices just make sure that not enough silver comes to market. So the amount of silver on the exchanges and so on is actually very small. It's much smaller than 1980.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.